Hi, everybody. Today, I want to talk about the American Rescue Plan. As you all know, this is about to get signed by President Biden. In this rescue plan, there are a lot of beneficial things for people and as well as businesses. Today, we'll focus on frequently asked questions for individuals about the stimulus payments, the unemployment insurance, and any other tax rebates that are in the bill. So let's look at some questions that are very common right now. How big are the payments? So the payments are 1,400 for each individual in a household. For example, a family of 4 can get 5,600, 1,400 each. Is there a partial payment for higher earners? Yes, but payments phase out when people make over, if you're single, if you make over 80,000, if you're married filing a joint tax return, they phase out when you make over 160,000. Do college students get the money also? Yes, they do. If they're a dependent of a taxpayer, the taxpayer gets the money, not the student. Do older relatives get the money also? Yes, they do. But again, if say, for example, you're taking care of your elderly parent and supporting them, you claim them as a dependent on the return, then you would get the money. What year determines the eligibility? So right now, they're either going to base it on your 2019 tax return or your 2020 tax return, whichever is on record. So if you haven't filed the 2020, they'll just base it on 2019. Now, one thing to note here, if you haven't filed and the IRS does not have direct deposit information such as your bank account routing and account number, it's a good idea to try to file, and hopefully they'll get it in time where they send you the money in a faster way rather than sending you a check in the mail or a debit card in the mail. So another question, what if I receive my stimulus payment based on my 2019 tax return, but the income report on the 2020 return that I haven't filed yet will be too high to qualify? One of the nice things about this is if they base it on the 2019 and you haven't filed the 2020 and you have a higher income, you don't have to return the money. So it's really a tax planning strategy here, whether or not you want to file to get the money based on your 2019 situation when your income was lower. And in 2020, you just don't file. And whenever you have to file the 2020 return, you won't have to pay it back. What if I'm a newly eligible for a stimulus payment based on my 2020 income, but I haven't filed my 2020 return? So again, I recommend you file. Hopefully they'll get it in time and you'll get your money. If I have a baby anytime in 2021 and meet the income qualifications, will I get the 1,400 for the child too? Good news. You also get the 1,400 for any kid born in 2021. When will the payment arrive? As y'all know, the last round of payments came in pretty fast for people that had the direct deposit information on record with the IRS. So we are expecting the same now. If you haven't filed your return, we recommend that you file so that you get it as soon as possible in the system, and then they're able to deposit to your account. What should I do if I still haven't gotten my payment from a past round of stimulus? So if you haven't received your money, the best route to get this is to file the 2020 tax return and then claim there that you haven't received your rebates, and they'll go ahead and send you that as part of your refund when they process your tax return. So how does the stimulus bill affect the unemployment? So there are two things here. One, it extends unemployment until September 6th. You'll continue to get an additional $300 per week provided by the federal government. And another thing is it exempts $10,200 of the amount of unemployment that you received, and pay attention to this, during 2020. For example, if you got $25,000 worth of unemployment in 2020, you would deduct $10,200 from that number, and only the excess would be subject to tax. So that's a good winner for people because they don't have to pay taxes on the full amount. If I already filed my 2020 taxes, how do I claim a new tax break? This is still not clear, but you may have to file an amended return according to the Senate aid. So On some of these things, you have to get with your tax professional because you may have to go back and file an amended tax return to claim some of the benefits. If you already erroneously reported all the unemployment as taxable, then now you have to go back and amend potentially, unless they come up with a mechanism where you can just change that somehow. But we have to wait on the regulations and see what happens. So what happens to the supplemental payments? So some of the payments are ending right now, and they'll end as of March 14th of 2021. They will automatically get extended by the state, by their, in our case, the Texas Workforce Commission will automatically extend benefits until that day. You don't have to do anything. You may get an interruption in the meantime, like you'll see, oh, I didn't get this week for unemployment, but then it'll just get restarted on its own through the unemployment process, but you have to wait. It may take 2 weeks, 3 weeks, but eventually you'll get your money for those weeks that you didn't receive the $300 for. The bill also has some parts about health insurance for Obamacare. It provides additional funds into the plan. So get with your healthcare, whoever is taking care of you, the consultant, and ask them, hey, well, how does this affect me? Do I qualify again if you were left out? Or, you know, they know all the specs, or eventually they will know everything that goes into healthcare and how it benefits you. So let's go on to the child tax credit. So we've heard a lot about the child tax credit and the dependent care tax credit. So child tax credit. In the past, you used to get up to $2,000 per child on certain income limits. Now that has been increased. For children under 6, you get $3,600 yearly, and for children 6 all the way to 17, you get $3,000. So that has significantly increased, and now there will be a point when you're going to be able to receive that money monthly. So it'll be like $250 per child between 6 and 17, or $300 per child between 1 through 5, or 0 to 5, let's say. And that money is just going to be somehow deposited to a bank account, or there's going to be a mechanism set up so you get that money monthly. You can also, as far as we know right now, opt out of getting that money. So when you file your taxes come the year end in 2021, you know, and you're in 2022 trying to file, it won't affect your refund as much. But the idea is that it's not going to affect you, because let's say, for example, you have one child and they're going to send you $300 a month. That child is under 6. So if they start giving you money in July, 300, then it'll be six months at $300. It's $1,800. So you're still get about $1,800, and it's now fully refundable. So it doesn't really affect you that much. You should take this as a planning tip. You have to make a choice here. Talk to your professional about this. So how much is the credit worth? I went over that. But now let's talk about the dependent care tax credit. And this is very important here. If you work and you take your child to a child care center, a daycare facility, and you're paying for childcare, now that becomes refundable, and you can get up to $4,000 per child, or $8,000 for 2 or more. So the max is $8,000, but this is now refundable. So this is something to also talk about your tax professional. Remember, a lot of this is coming in really quick right now. If there's any changes, I will make updates on this. So let's see what else the bill impacts. How does it affect the credit? Again, it changes from 2,000 to up to 3,600. And so who's eligible? If you make less than 150,000 for filing joint, or if you make 112,500 if you head a household, or if you make less than $75,000, you qualify for this. So how did the advance payments work? Again, there's going to be a system set up for this, like I mentioned, where you're going to be getting a monthly payment. It says you could get up to $500. Originally it was $300 per month, but you can adjust that, or so it's in the discussion, or you can just opt out and say, I don't want the money. I just want it when I file my taxes, so I get a bigger refund. It's really a choice here. This is more to support the economy of individuals and their finances right now, so that they're able to get through this pandemic. Could I end up having to pay it back? Probably. A taxpayer may receive too much money for the advance payment. Excuse me. Could I end up having to pay it back? Maybe. A taxpayer can get a lot of money, and then when they file their taxes, they didn't necessarily qualify for the child tax credit because they went above the thresholds, or they had too much income and they didn't have enough withholding, so they may end up having to pay some of this money back when they file their taxes. So could this potentially create surprises? It could. It's really taken from a perspective of risk in some cases, or if you know your income is low, you're married filing joint, you make $50,000, you have 3 kids, probably not going to affect you. But let's say you make $135,000, you didn't have enough withholding, you only have 1 kid, it might affect you. You just got to be careful in planning these things and talking to your professional so that they let you know how to go about this, how to deal with it, so you don't end up with a surprise. Will the bill increase the earned income tax credit? For 2021 only, the bill does increase for people that have no children. It makes it almost 3 times the amount that it was in the past. In the past, it was $543. Now it's $1,502. So if you have a couple that qualify for earned income because they don't earn more than $150,000, they can potentially get a big refund this year. So for earned income, this is different than the child tax credit. Again, child tax credit, $3,000, $3,600. Earned income tax credit is different. It's based on the money you earn. So if you earn salaries, wages, compensation for services you render, you qualify for this. As long as you don't make over a certain threshold, you're entitled to get additional money here. So one thing to point about the earned income tax credit, the term says earned income. Right now, a lot of people are on unemployment because of the pandemic. They don't have earned income. Unemployment is considered unearned income. So you can use the 2019 numbers for that matter. Just talk to your professional. If you were working fine in 2019 and then you were suddenly unemployed, now you can go ahead and use those 2019 numbers so that you can still qualify for earned income tax credit for the child that you have, or even if you have no children, so that you also qualify, you may use those numbers. With regard to unemployment, you just gotta also understand you can use those 2019 numbers for the earned income tax credit. Just keep that in mind. It's very important to know this. Are there any other changes? There are a lot of changes. There are things for housing, for food benefits provided in the bill, SNAP benefits. So you may want to consult with your, dial the 211 and find out. Is there anything for homeowners? The bill provides $10 billion to help people with mortgage payments, utility bills, and housing costs. It also provides money to states. So states, in addition, may issue additional programs to assist their residents to get the economy back on track for hard-hit areas. It also has monies for homeless. So people that are homeless, they can also get assistance, because this provides money for motels to be converted into shelters, and they get paid to give help to the needy. So there are things here for the homeless too. So what are the student loan changes in the bill? There's a big one for people who already have debt. You wouldn't have to pay income taxes on forgiven debt if you qualify for loan forgiveness or cancellation. For example, if you've been in an income-driven repayment plan for the requisite number of years, if your school defrauded you, or if Congress or the president wipes away $10,000 in debt, you don't have to pay tax on that. But it's, again, if you already have debt. This will be the case for debt forgiven between 2021 and the end of 2025. So keep this in mind. You already had debt. they suddenly forgive it because of you're in low income, you've met the amount of years for the forgiveness, then you potentially don't have to pay any tax on that. That's just beautiful. What about the pay leave and family leave? Pay leave, last year, employers had to provide by law, if they had under 50 employees, had to provide by law, or anybody with employees pretty much had to provide by law. Under 50, you can make an exception of saying, I don't have to pay, right? But anybody else had to pay family leave and pay leave, sick leave, and the employer will get a credit. But now employers that provide this stuff, they can get tax breaks, but it's not mandated by law. So employers don't have to pay you, but if they choose to pay you, there's tax credits for them. So you may want to talk to your employer, let them know, hey, if you pay, you know, there may be potential tax breaks for you when you file the taxes, right? So it helps employers keeping the workforce there. So again, thank you for watching this video. My name is Sam Cabriales with Arredondo Cabriales CPAs. If you need any assistance, don't hesitate to reach out to us. Thanks again for watching. Have a wonderful day.